Well, the mood on Wall Street has turned quite sour because investors have now had a double negative. As I reported last night, US employment was weaker than expected in January, but the Federal Reserve has now said it's going to press on with winding back the money printing anyway, starting with $10 billion less this month and probably more reductions after that. The third negative is that American stocks look pretty expensive. So 1.3% got knocked off last night, followed by 3.1% in Tokyo today. In Australia, the fall was 1.4% today, with banks the biggest losers, along with retailers and the mining giants. But some European markets went up. First, because the Italian government managed to sell some bonds for the best price and lowest interest rate for decades. And second, because Spain produced its biggest rise in quarterly GDP for 6 years, 0.3%. On commodity markets, precious and base metals went up last night, but the oil price fell. And the Australian dollar is still around 90.3 US cents, as it was last night. But it has fallen once more against the New Zealand dollar. Now, over the past 3 years, the Australian dollar has fallen 10% against the US dollar, but 20% against the New Zealand dollar. And it appears to be headed for Kiwi parity. And finally tonight, National Australia Bank's economists have produced a consumer anxiety index based on survey questions about job security, health, retirement savings, the cost of living and government policies. The nation's most anxious people live in Victoria. They're aged between 30 and 49 and are female. The least anxious are young men living in Tasmania, which has the highest youth unemployment rate. So obviously they're beyond worrying. And that's finance.